Welcome back to the Alex Helton Real Estate Show. Today we've got for you the May market update with some stats and information from April 2023. If you find it helpful, please share it with someone who may benefit from it and subscribe to our channel. We've also got two amazing partners on the show, Rob Smith, Mortgage Investors Group. Anything you want to say about Rob?
Yes, there are.
Well, so many things, probably.
We've been working with Rob for a long time, years, maybe, I don't know, it's getting close to a decade now. And he just has always had competitive rates. He's got a ton of experience and he knows there's a lot of loan options out there and can help people understand kind of the best options for them, which is really helpful. And he always closes. If he tells you he can close, he can close. And if you've never bought a home, or if you've bought a home and closed on time, where you don't realize how many people out there, lender-wise, do not close on time. A day or two before closing, and they're notified like, hey, we can't close on Thursday. It's going to be sometime next week.
Yeah. I talked to a guy this morning, actually, who said his closing got pushed back 3 separate times a week each time, and eventually he just gave up. Because it's so frustrating, he couldn't handle it. We've never had that with Rob.
Closing delays from a lender blow my mind. They should never happen. All right. I know there's exceptions, but generally speaking, that should not happen. And Rob,
one job.
Rob makes sure that doesn't happen, and he closes on time, which is great. But he does have really competitive rates, and I don't just say that because he sponsors our podcast. I say that because we have clients that we recommend, hey, if you'd like to get a second opinion, do. I have had personal experience where I got a second opinion, and Rob was the best rate, and I had the education and the confidence to know he was going to close on time. So
yeah,
that's hard to beat.
He's also really educational. A friend of mine talked to him recently and just went through all the options. Rob's got some great ways to actually save money, lower the interest rate. So if any of those things sound helpful, give Rob a call or call us, and we're happy to make an introduction there. Adam Darby's with State Farm. Both of us work with Adam. Yep. He saved both of us money. Ultimately, with insurance, that's kind of the name of the game. Are you getting the best price? Are you overpaying? He also has a quality of product that's better than a lot of options out there. So if you want to check out your rate, see if you can do better, he's happy to provide a second opinion without pushing you into something that doesn't make sense. So
I would also say, like Rob, with Adam Darby, I have experience filing a claim. And
it was great.
You're an insurance company, like insurance companies out there, you hear, whatever the claim may be, that some people have such a hard time with a claim. It's almost like you got to fight a lawsuit battle to get your insurance.
With your insurance company, not with the actual product.
Right. And I've shared on this podcast before, a rodent ate the electrical in my car, and it was not cheap to get done, and State Farm, they covered it and did everything, and it was just super easy. Honestly, that was the biggest thing. It didn't feel like, oh my gosh, I have this big project now. And
I think if you've had a bad experience with a claim, you just kind of assume that's how claims go. It's not how it has to be, from your experience. So call Adam. If you're curious, call Adam. You're not going to get roped in anything, but well, Alex, the next time we record, school's going to be out. Summer will be in full swing.
It's going to be hot.
Probably getting hot. What's the first thing you're looking forward to when summer hits?
Shedding the vest, man. I've had this thing on for 6 months now.
I haven't taken it off at all.
Sleep in it. The first thing that I'm looking forward to, I think it's the first weekend that the kids are out of school, is we're going to family camp.
Okay. I went to family camp as a kid, so I'm really excited for your kids.
That's right. And it meant a lot to you, didn't it?
It's some of my best memories, to be honest, is going to family camp. I don't, honestly, not any specific memory is that amazing, but just the fact that we went and the sort of the whole experience is just, was one of my favorite things as a child. So where are you guys going?
Deer Run Retreat.
Okay.
Here in Middle Tennessee.
Okay.
It's in Williamson County, 30 minutes from the house. So that's good.
Yeah. Awesome. Yeah. This is first time at family camp?
First time at family camp.
Okay. What do the kids think? Do they know yet?
They don't know. Well, they know we're going. They don't know what it's going to be
But
like.
they're faithful podcast watchers, so they'll know soon.
They're going to find out through watching this.
Right.
Yeah. No, it's 2 nights, and I think we have an individual cabin, but I don't think it's the kind like, that have like wasps in the corner. I think these are like,
You're hoping.
decent places. But they have a ton of activities out there, like archery and shooting and all kinds of stuff. So it'll be good.
Nice.
What about the Dahl family?
Oh, man. Not a unique thing. It kind of happens every year, but our neighbors have an amazing pool. We swim in almost every day. And so the kids have been talking about and asking.
Do they know you do this?
Do they? No, they don't. No, they've been asking for at least a month. When is the pool going to open?
Really?
If there's sun, even like 50 degrees and sunny, they'll be like, is the pool opening today? So they're ready. Honestly, Cheryl's ready because that's a good activity for the kids where she doesn't have to be in quite so much mom mode. So
yeah,
pool opening is a big day for our family, and that's really what we're looking forward to.
So what kind of pool guy are you? Are you the guy like you just lather up, like your whole body's covered in white cream? Or are you like, chilling on the...
If I was, I would...
What's Sam Dalton?
I would say classic dad, in the sense that you're not supposed to shoot people in the face with water guns, and it's like, but Sam does it. And I kind of have the reputation with the neighbors of the guy that bends the rules a little bit to actually have fun in the pool instead of making it so manicured of like, how do we behave? So we have a lot of fun. Little sneak up on the kids and throw them into the deep end, that kind of thing.
Fun over safety.
For sure.
Safe enough, but...
Yeah, no one's in danger, but
that doesn't surprise me about you.
We're going to push it a little bit. So, all right, Alex, April.
Yeah.
There's always interesting stuff that happens, but give us a little summary on what happened in April and kind of what that means in a broader context. We've talked in the past about the sort of the last 12 months, how the market shifted and how that looks on the board versus maybe what we're actually today experiencing. So maybe give us a little reminder of kind of the journey to set up the actual numbers from April.
So the journey has been, here's the big thing to keep in mind, and this is still the case, is that between, call it about this time, 2022, and now, prices ticked up 10% and have essentially come back down 10%. Mm-hmm. So, between say April and June, July-ish, again, as a reminder and maybe new information for those that haven't watched the podcast, that's when the Fed Reserve really started getting aggressive in interest rate increases. Mortgage rates started going up, and we just saw a massive influx of buyers to the market. I think a lot of buyers that were on the fence also got off the fence and into the market when they believed, hey, I'm going to go ahead and lock something in before interest rates continue to go up. Who knows how much? 2%, 3%, 4%, 5% more. And so because of that demand, we saw prices jump up 10%. They have since come back down about 10%. I feel like that's where we've been in terms of values. Where we're at now, I think, here we sit early May talking about April market. It's really pretty similar to what we saw in March. And that is, seems like a lot of the adjustment has happened. And now we are holding relatively steady in terms of values. Mm-hmm. So, should we jump in and get a little bit more detail?
Yeah, give us the specific stats. And if you have questions about any of the numbers that we talk about or how they may apply to your specific situation, just give us a call. We love talking real estate. I mean, that's what we do every day, obviously. So if you've got those questions, let us know. But Alex, give us the lowdown on the specifics for April.
Yeah. So April stats, Davidson County closings are down 32%. Closings are down 32% in Davidson County over April of last year. That's a big number. In the last several months, we've seen that number as high as 40 to 45%. So it's not a big surprise. Median price is down 5%. This number over the next few months will end up getting close to and stick around 10%. So again, this isn't a surprise.
Probably even next month. If I remember, May was like the peak and it got to like 470 median price. So that next month, that number is going to be up for 22, probably about the same for 23 would be my guess.
Yeah.
And that number, the red number over there is going to look bigger and madder.
It is. So that's it. It's the interesting thing, and we're trying to give context. This is based off last year. So what's starting to show up on the board has actually already happened, if that makes sense. Excuse me. And then Williamson County closings are down, call it 40%, and median price is down 4%. So similar story in terms of number of closings that closed in April in Davidson-Williamson over last year, as well as median price. When we look at the 3 months, past 3 months over the same period last year, closings are down 23% and 24%. Median price is down 3%, and then holding steady in Williamson County. So the last 3 months over the same period last year, it's the same story as what we're looking at in April year over year. So that's kind of what's going on with values and number of closings. Getting into new listings. So this is kind of like what's happening now and activity going on in the market. Number of new listings that we typically see in March of, say, this year typically would be a 5% increase, and that's down 17%. Why are new listings down? We would say it's because people are locked in. I'm locked in. A lot of people are locked in on mortgages to 3%, 4% interest rate. We had talked offline about how supply and demand is what dictates values. And on the supply piece, you just don't have a lot of people that are coming on the market because they're going, man, for me to give up what I have, which is a very, very, very low affordable interest rate, it has to be a really compelling case for me to move. And so a lot of people that might have moved a year ago are, adding on or renovating or, doing whatever they need to do to their existing home to stay put, at least for now. So new listings are actually down 17%. Number of homes for sale is down 10%. And then pending contracts in Davidson County is down 1%. However, in Williamson County, it's up 20%. So really one of the big questions going on in all price ranges right now is, are prices going to go up? Are they going to go down over the next 12 months?
Which has kind of been the question, we'll say, for the last 9 months.
Yeah.
We had the spike. We saw the trickle down to the range we're at right now.
Yeah.
Everybody's kind of going, when is the bottom going to fall out?
Mm-hmm.
Haven't seen it yet. I don't know. We've kind of said that probably the bottom probably won't fall out. There may be a little bit of softening. Do you want to speak to that at all?
Well, I think when you look at, last month we had said on this podcast that or at least I said my opinion was, all things considered, I believe prices could go down as much as 5%, or they could go up as much as 3 to 4%. And I think when you look at here, again, there's a lot of different factors. And there's also, again, as you mentioned offline, just economic data that's going to continue to roll in that influences these things. But all things considered, when you look at the fact that new listings are down, so that's supply, right? Homes for sale is down. And then in Williamson County, pending contracts are up 20%. Like, that is, supply is down and demand is up. Now, these are different, like the supply is down. The supply is down more in Davidson County. Demand is up in Williamson. But these are the factors that we look at that when in our area, it's going, man, this is not a clear path to appreciation or depreciation. It seems like the market is stable, at least stabilizing. Going into today, we expected that the Fed would raise rates 0.25%, and that they would no longer raise rates for the rest of the year. We don't know what they're going to do the rest of the year, but we know that today they did raise rates 0.25%, and we're expecting rates to essentially stay where they are. So all of what has felt like the sky is falling, or we've kind of gone off a cliff over the last 9 to 12 months, really has been this. It's that everybody, you're like, half the people you're talking to that in the past would have been moving aren't moving. So it's like, man, it's like, it feels like crickets. However, you still got 900 homes that sold in Davidson County last month. You got 318 that sold in Williamson County last month. Like, there's still business that's transacting. So the Fed did raise the rate 0.25%, and the expectation is they chill out. So I think a lot of the volatility of the last 9 months has just totally been driven by uncertainty, driven by how aggressive rates have gone up. And so the fact that maybe that doesn't happen for the next 12 months feels like people will be able to breathe, kind of get used to a new normal, see that things are stable, and begin to return to a pre-pandemic feeling market.
Yeah, and we've seen the stability. If you look for the stability, you see signs of it where, like, mortgage rates have been 6.5, give or take, for the last month. They haven't gone above 7. They haven't gone below 5. They've been, you know, there's some day-to-day bouncing, but they're relatively in the same range. They won't, the Fed interest rate hike won't directly and immediately impact the mortgage rate. It's worth noting for those that haven't watched previous podcasts. So it will have an indirect effect over time potentially, but a lot of that we have to kind of wait and see what happens with CPI, what happens with job reports. All those different things are what's going to dictate most of the future related to rates. So anything you want to say on the inventory? It's kind of the same story, except we're that high price point. It's getting, I feel like every month it gets a little bit closer to that 6-month mark that we talk about. Low price point, still a really tight squeeze, but the gap is growing as far as those price ranges go.
Yeah, I think that's a good summary. I mean, on inventory in Davidson County, I mean, under 500, I think for a while you're going to see, with prices at where they are now, 500 doesn't get you what it did 5 years ago. So I think under 500 in both Davidson and Williamson are going to be just, you know, pretty tough markets, pretty low inventory markets for the foreseeable future. 500 to $1 million is up just slightly in Davidson. Williamson's still at 2%. And then you're right. I mean, typically the first market to take a sort of dip in number of transactions is some might even call, this is over $1 million, but some might call like ultra luxury or something, 4, 5, 6, 10 million, $15 million estate properties or whatever it is. Those are the first ones typically to transact less. Mm-hmm. And that's what we're seeing here. So
yeah, and we've seen that just in our experience too, where some of those ultra high dollar homes that we see in the market maybe aren't moving as quickly as they would have in the past. Also interesting to note, just in the Davidson, that 0 to 500 price point is a really big chunk of the inventory in Davidson County. Yeah. So you have in Davidson, like the majority of the homes, it's a really tight market. Yeah. Even with, less transactions, it's just that the supply and demand is declining at similar rates. Yep. So, all right, anything else you want to add for April, Alex? What should people be thinking about if they're kind of worried about what's the future hold? I'm waiting for rates to drop maybe. Yeah. There's some uncertainty, like, I don't know, we're seeing a lot of people staying in their homes, which means that first-time home buyers or people moving in from out of state make up maybe a higher percentage of buyers. Yeah. So for a first-time home buyer, they go, Alex, what should I do? And I know it's all different, but if you're going to give general advice and then call us for the specific advice, but general advice,
Yeah.
what would you say?
So this is always hard for me to answer because it is case by case. Here's what I would say about the market is that the market's different now, so that if you have an emotional drive to buy in this market and said, how is it different now than it was 12 months ago? I'd say you can negotiate things that you couldn't a year ago. So we're back to having home inspections. We're back to having appraisal contingencies. We're back to having financing contingencies. You're typically not competing with 10 people.
You don't have to buy it the hour after you see it.
You don't have to buy it. Sometimes
You can wait. You can sleep on it.
you might even be able to go see it a second time. So you're able to have sort of call it contract protections in place. You're able to negotiate more, so you might have some closing costs paid. These are the people that are interested in relocating here. They've sold a home in, let's say, Washington State, and they want to buy a home. For somebody that does not have that emotional drive to do it, I would say don't do it. We were talking offline with a friend, and it's like we want to provide information that's helpful and true based on our understanding, our knowledge, our market expertise, and our desire to be helpful to people, regardless of the fact that we are a real estate agency and we make money when people transact business. So we want to give helpful information. And so for somebody that says, hey, I'm on the fence and I'm really not, I really want to wait until I personally feel like the market's at the bottom, then I would say you need to keep renting. And for people that are relocating here or that are going, I would sleep better if I owned my home, then I'd say, well, let's talk about how the market's different. And because you want to do that, then let's take a close look at it and just make sure you're not making a big mistake. So you might look at things like rent costs versus mortgage and, tax savings and et cetera, et cetera. You might just dig into it deeper. So
yeah, and worth remembering, any decision comes with there's risk and reward. I want to wait till the bottom. Well, maybe the bottom already happened.
Yeah,
we could be going up. You don't actually know until you've got the hindsight to see it. So
yeah,
that's where it comes down to what's right for your family, for your situation right now, and real estate being generally a long-term play.
Yeah.
It's not a, what's the house I want to live in this month and then switch next month or even year to year. In 5 years, I can feel pretty confident saying these prices are going to be higher than they are today.
Yeah.
On the board. So if you're planning on being in a place for 5-10 years, long-term, you're not going to be generally making a mistake purchasing. You can refinance your rate if it's high. That's the historical precedent.
Yeah.
But if there's transitional aspects of your life, then maybe renting is the best right now.
Yeah.
Because there's a lot of stuff in the market that's kind of in transition. So any last words before we wrap this one up?
Thanks for watching and tune in next month.